Hello, good morning, ladies and gentlemen. How are you all doing today? Well, from my own side of the world, I'm doing fine here and trust you are doing well as well. And how are you getting ready for the New York session today? Let me know in the comment section if things are good on your end. That is, if you can see my screen and you can hear my voice clearly. You can type in hi in the comment section to confirm that we are good to go this morning. So I would like to see some feedback, please. Let me load up my comment section. Okay. All right. 495. Okay, thank you. Otmaru, good morning to you. Valeric, how are you doing today? Good morning. 4101, hi, how are you? Fifi77, good morning. Hey Carrie, how are you doing today? Good morning. All right, thank you very much. Seba090, I see you too. Thank you. And I think on this note, we are good to go this morning. I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host as we are going to be evaluating the financial market using technical parameters to identify trading opportunity lining up for us today. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have you guys around. What we simply do here is to come together on a daily basis to review all the pairs that we have been monitoring since the beginning of the week. We review these pairs, we identify technical positions where we want to be taking advantage of any trading opportunity, and also we share ideas on how to manage our existing trades ahead of the New York session. I can really understand if it looks a little overwhelming at first. This is because you are joining us for the first time, and it will take some time for you to be able to adapt with our style here. But I assure you, with time, you will get to understand how this works, and you will be able to use the information you have gathered here to make your own individual decisions. So on this note, I welcome you all once again. So with that being said, we shall be diving right into the business, and we are going to be looking at the economic calendar first of all, so that we can keep tabs with the economic events. And you all know how important the economic events are, as even though we have our technical positions identified, we still need some catalysts that will drive price action. And this catalyst most of the time comes in form of a high impact macroeconomic event, which everyone in the market will be looking forward to. And this also helps us to be able to position ourselves in such a way that we can catch any potential trading opportunity ahead of the New York session or the event itself, and after the event too. So with that being said, let's dive right into the economic calendar, and we shall be focusing on high impact events that will be having a significant impact on the financial instrument that we have been monitoring since the beginning of the week, which are the US dollar, the pound sterling, and the Japanese yen. And for today, Tuesday, April 18th, the only events that we are going to be looking forward to are events affecting the pound sterling, and this event actually happened about 4 or 5 hours ago, and that's the first one is the claimant count change, which is normally released by the national statistics, and this gives us the number of unemployed people in the United Kingdom. And a high reading always gives us a negative signal for the pound sterling, while a low reading is seen as a very positive signal. And if you look at the data we have here, we had an actual data of 28,200 as against the minus 11,800 that was projected by the majority. And this is quite on the very high side, which is more or less a negative signal for the UK economy. So we are going to be looking at the chart to see how price action has been reacting to the fallout of this event. Then the other event coming in that came in earlier today is the ILO unemployment rate. It's also released by the National Statistic and gives us the number of unemployed workers divided by the total civilian labor force. It's also a leading economic indicator for the economy, and when the data is decreases, it's more of a positive side, and when the data increases, is more on the negative side. And look at what we have here. We had a consensus projection of 3.7%, and the actual data came in at 3.8%, which was on the increasing side, which is more or less a negative signal for the pound sterling. So the data that came in this morning were not that favorable to the UK economy. So we are going to be looking at how price action has reacted to this event on the chart. So with that being said here, let's dive right into the chart here, as we are going to be looking at the first commodity for this week, which is the US oil. Now on the US oil, we had the situation since yesterday. We have been quite profitable on this pair as price action has consistently found lower lows and lower highs in the last 24 hours, making this commodity one of our most profitable trades so far in the last 24 hours. Now, what was our expectation during the live session yesterday? What did we see on the chart that made us to be part of this bearish move? So during our live session yesterday, we considered how participants in the market has been reacting to the current market structure, and what we were able to identify was the fact that price was initially trapped within a range between the $82.60 level and the $82.20 area. It was such a tight range, it's like a 40-cent range thereabout. And you all know what we look out for whenever we have this kind of simple setup. We all need to be patient, waiting out for price action to either break out of the resistance line for buying opportunity or breakdown of the support line for selling opportunity. And during the live session yesterday, we already had the breakout of that structure. If you remember yesterday, we already had the breakdown of the structure, and we are beginning to see some selling pressure resume around that area. And what we decided here is that we are going to be having a sell stop order below the support line to be part of that potential move to the downside. And I think we went on further to look at a much more lower time frame. I think we went to as far as the 15 minutes time frame, where we identified the setup here at around the $82.10 level, where I said if we had missed out on that opportunity there, we could also join a retest of the structure at any point in time if price action ever comes back to do the retest of that level. And this was exactly what happened. I think a couple of hours into the New York session, we saw price action come back to retest that structure, and it was on this note we were in for a massive move to the downside. And if you remember vividly yesterday, we also identified key structures as well, where we said if price action ever breaks down those structures, we are going to be looking out for more opportunities. So with sell stop order below the $81.75 level, the $81.50 area, we had sell positions triggered. And if you had followed this through accordingly, as we had projected yesterday, you would have at least 3 positions running. And with the first position currently, if you're still running in this trade, you will be having about 170 pips on the first position, while the second position will be running with about 120 pips, and the third positions here will be running with about 100 pips. So that's like approximately 400 pips thereabout on 3 good positions. So for those who are taking advantage of this move yesterday, well done to you guys for being on standby to have caught that move. As what we want to be doing right now is to ensure that we secure the current position. So if you still have a trade running, some of us will have probably hit our TP target, but if you still have the trade running at this particular point in time, it is very advisable that we are going to be moving our stop loss to lock in some profit, as anything could actually happen, and obviously we don't want to lose out on whatever we had made so far. And excuse me please, and in order to lock in some profit here, we also want to consider giving some room for price action to breed. So what I will be suggesting at this point is to have your stop loss somewhere right above the $81 level. Let's give some room for price action to breed, with the hopes that we could still have another wave to the downside, where price could still do some retracement back into structure before another move to the downside will happen. So once again, well done guys for being on standby. So the next thing we are going to be doing right now is to observe the current market structure and have a fresh new look at the market to see how we could actually take advantage of any trading opportunity during the New York session today. So are we still going to continue selling the US oil today, or are we going to be getting ready to buy the US oil? Well, this answer will be coming in very shortly. So let's first of all go into the daily time frame. Let's look at things from an holistic point of view to see how price action has been playing out on the higher time frame, and for the sake of those who are not part of our live session yesterday, so that you can also be part and also be on the same page with us. So we are going to be going into the daily time frame right now, and here we are on the daily time frame. So on the daily time frame, this was what we identified at the beginning of the week. We saw how price action has been on the bearish note since the second half of last year, and when we zoom in further into the later part of last year, we saw how price action was trapped within a consolidation phase between the $82 mark and the $72 area. And one thing interesting happened during the course of last week's trading session, as we saw price action break out of that $82 mark for the first time in the last 5 months to trigger a potential bullish trend continuation pattern. As you can see, this area has been a strong selling niche in this market, which has actually lasted for about 5 months. Now, with the breakout of that structure, we had some expectations yesterday where we were thinking of the potential of buyers turning that $82 mark to be a platform for a trend continuation, as we saw the breakout of that level. And then we also considered the potential of the breakout here to become a false breakout, and this was considered because of the fact that price action was at a critical point around that $82 mark area, which interestingly shares a confluence with that bearish trend line that has been guiding bearish momentum since the second half of last year. So we also considered that the trend line may also still be very strong, where a breakdown of the $82 level would have brought price back into that strong sell window, which has been consistent for the last 5 months. So we said if price action drops below the $82 level, selling pressure below that structure, then we will be back at the seller's territory, which is more or less a very strong, which more or less has a very strong memory for selling power. And I think this was exactly what happened yesterday. We saw price action drop below the $82 level. Now the question is, how far will this retracement phase go? Is it going to go as far as the $80 level to incite another wave to the upside, or is it going to go as far as this trend line here to incite another wave to the upside, or will it even go as far as the $70 area? So these are things that we are going to be looking at on a much more lower time frame. So with the information we have gathered here on the daily time frame, we want to be scaling down into our 1 hour time frame where we begin the today, and then let's continue to watch out for how price action has been reacting to the structure. I think we should look at the 4 hours time frame first of all. I think we should be able to I would like us to do some, give me a moment please. I want the chart on the higher time frame to be much more neater than expected here. Okay, hold on a second. Okay, so we go back into the 4 hours time frame now. I think it should be neater now. All right, so this is the 4 hours time frame, and this was what we saw at the beginning of the week. We saw our price has been ranging between the $83.40, which happens to be the resistant line of this huge channel, and then we have the support line of this channel at the $79.50 level. Then we also had a key level at the $81.50 area, which was supposed to be our yardstick for trading activity this week. And what that simply means is that if price action continues to trade above the $81.50 level, we shall remain comfortable in our buy position and look out for more opportunities to buy. But if price action breaks down that trend line, that's $81.50 level, definitely we'll have no choice than to start thinking of more selling opportunities. And if you look at what happened here in the last 24 hours, we've obviously have seen price action drop below the $81.50 level, which is more or less a sign that sellers are gradually gaining some momentum. Now, the TP target from an holistic point of view right now should be the $79.50 level, since this level has been a major support line for the last 2 weeks. And whatever, depending on how price action reacts to the structure, will now determine how, if we are going to be buying or adding more sell position to our existing trade. However, if we look at what has happened here in the last 24 hours and taking into consideration the impulsive move that started at the $82.60 level, as you can see here, price action dropped into the $80.60 level. Then we started seeing a consolidation phase between the $81 area and the $80.60 area to give us a little consolidation phase in this market. And if we look at this from a technical standpoint, this more or less transitioning into a trend continuation pattern in the form of a bearish rectangular pattern. You could also call it a flag pattern also. And for me at this point, I will be suggesting that we are going further to the downside, where a breakdown of that $80.60 level will be giving us a confirmation to join that decline to the downside. So with a sell stop order below the $80.60 area, which is the support line of this old structure that we have here, I already have another sell position triggered at this point. And if you had also taken advantage of that move, well done to you. Kudos to you for being on standby to have caught that move. So at this point in time, we are going to be extending our TP target into the $79.50 level, and depending on how price action reacts to the structure will determine if we are going to be adding more sell position, and that will only happen if a breakdown of this level happens. But if we start seeing buy pressure resume above the structure, or price action finds it difficult to come even close to that area, and we start seeing buy pressure resume above that level, then we shall be getting ready to be part of that move to the upside. So now let's scale back down into the 1 hour time frame so that we can look into this current structure closely. So now, for those who had been on a sell position since yesterday, I hope you have moved your stop loss to secure the current position. And right now, this is where our center of focus is going to be for today, and that is the range between the $81 level and the $80.60 area. Now, with the situation we have here, we already have a breakdown of the structure, and I told you that I already have a sell position triggered here. There's still a chance that buyers could still push price to the upside here. If we take into consideration this trend line here that was broken during the early hours of today, we all know from a technical standpoint that whenever price action breaks down a key structure like this, we expect at one point in time price is likely going to come back, do a retest of that structure in anticipation of a trend continuation in the direction of the prior leading price action. So we could still see price action come into this area. So in this case scenario where I had a sell stop triggered here, a stop loss above the $81 level seems most appropriate, giving room for price action to breed, and that is about 50 pips stop loss in that regard. So let's see what happens from this point. So it's either price continues to the downside from here, or we might see price action come back to do a retest of structure where the appearance of selling pressure around the zone on our lower time frame, where we start seeing buyers finding it difficult to climb above the $81 mark, then we can be in for another wave of bearish momentum with a sell stop below the $80.60 level. So that's what we are going to be looking at on selling the US oil for today. However, as you all know, we also want to take into consideration the potentials of the buyers too. Now, if we go back into the 4 hours time frame to look at what has really been happening in this market in the last couple of weeks, remember it has been very bullish on this chart, as you can see here, and this led into price action trapped within a channel which has a high tendency of turning out to be a trend continuation pattern. Now, if the $80.60 level, which happens to be the support line of that consolidation phase we identified on the 1 hour time frame, if that buy pressure there continues and price finds it difficult to even find a new low or even get closer to this area, then we might likely see buy pressure around this area turn out to be the beginning of the second leg of that bullish momentum that started last week. So this might likely turn out to be a retracement into this area where continued buy pressure here, price action finds it difficult to break the previous low, could incite the second wave of that bullish momentum. And if that is going to be the case, what do we want to see on this chart that will make us feel comfortable to open a buy position? Now let's scale back down into the 1 hour time frame to look for what to look out for here that will make us to buy the US oil for today. Well, personally, what I want to be seeing here to buy the US oil is to see this bullish momentum continue to the upside in such a way that price action breaks above the resistant line of this channel that we have here, and we are not having a buy stop order above that level right away, as we still need some confirmation to happen. Obviously, we have been very bearish here in the last 24 hours, so we don't want to jump into any buy opportunity yet without a significant confirmation. So what I want to see here is price action breaking above the $81 level, probably climbing above that trend line a little bit. Then I want to see some buy pressure resume above the structure where price action could transition into a trend continuation pattern, or buy pressure above this level, giving us signs that sellers are finding it difficult to drop back below the $81 level, then at this point I want to be in for a bullish momentum, where a further breakout of the $81.50 level, remember that our key level on the higher time frame, will be welcoming more opportunities in this trade. Now, to make things a little bit more easy for us to project, hold on a second. So to make things a little bit easy for us, because sometimes the structure can be a little bit confusing, so we still need some level of comfort that will make us feel comfortable in whatever position we are in. So if we consider the bearish momentum that started this week, then we want to be connecting the series of lower highs here, which definitely we want to be using as a guide for our trading activity for today. So I will give this a red color so that I can emphasize its importance on the structure. So you can see our price has consistently found lower highs in this market. So we are going to be using this trend line to guide our trading activity for today. So how are we going to be using this? Now, if price action continues to trade below that trend line, we shall feel comfortable in our sell position. So we continue to look out for more opportunities to sell. However, if at any point in time during the New York session today, price action breaks out of that trend line to the upside, remember I said a breakout of the $81 level will start considering buying the US oil. So if price action breaks out of that trend line, which also shares a beautiful confluence with that $81 mark, then we want to be getting ready to buy. But remember, like I said earlier, we are not going to get too excited, as we still need some confirmation to happen around this area. So we might likely see our price action come back to do some retest of structure, the $81 mark, or even the trend line here, where the appearance of buy pressure on our lower time frame will help us to anticipate a bullish momentum. So if that happens, we could have a buy stop order above the $81 level, buy stop above the $81.50 level, and we can continue that trend continuation to the upside. So we have a very simple setup here. We have a trend line which we want to focus our attention on, so you can map that out on your chart as well, so that you want to use it to guide your trading activity. And for those who are already in the sell position that we have been enjoying since yesterday, I've told us all to move our stop loss, secure the current position, move your stop loss to somewhere right above the $81 area, as we want to give room for price action to breathe, hoping that a trend continuation to the downside is still very possible. But if a breakout of the trend line happens, then we want to be getting ready for a bullish momentum. So that is that on the US oil for today. I hope I made myself clear. If you have any questions whatsoever, feel free to drop your enquiries in the comment section. So with that being said, here on the US oil, we shall be moving on to the next pair. And the next pair we are going to be looking at today is the US tech. The US tech was bearish at the beginning of the week, as you can see here. And let me quickly run through how the week started for us on the US oil. So we saw the situation during the live session yesterday, when price action was trapped within the 13,120, which was the resistance line, and the $13,075 level. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out the resistance line or break down the support line for trading opportunity. And this is exactly what happened yesterday. We saw the breakdown retest of the 13,075 level to trigger our first sell position for the week. And in fact, price action moved over 90 to 100 pips in our favor before this bullish momentum began. And I hope you moved your stop loss accordingly to lock in some profit before we were taken out of that position. And since the later part of the New York session yesterday, we have seen a situation here where price action has continued to find higher highs, and you all know we cannot jump into that bullish momentum yet unless that breakout of the resistance line we identified yesterday happens. And you all know we had a buy stop order above the structure too as well, and if you had kept your buy stop order, you would have had this buy position triggered as the breakout of that resistance line has proven that seller's position here has been taken out. So at this point in time, we'll still need some liquidity to happen here to give us further confirmation to join a more bullish momentum to the upside. So for those who took advantage of this 1-2 as well, well done to you for being on standby, as you would currently be running with about 55 pips in profit. Now the next thing we want to be doing right now is to secure the current position, and the 13,140 below that level seems most appropriate to lock in some profit, as we want to give room for price action to breed, hoping that the trend continuation to the upside will happen. Now for those who had missed out on this opportunity, probably you slept off, or probably you are not around, well, let's see if the market still has a potential of giving us more trading opportunity. Now, if you all know from a technical standpoint, whenever we have a breakout of key structures like this, we still expect price action to come back and do a retest of that structure. And if a retest of this level happens, then it appears the market is one way or the other giving us and presenting to us another opportunity to be part of that move to the upside. So for those who had missed out, at this point you want to remain patient. You want to wait out for price action to do some retracement. We don't know how far that retracement phase will go, but we have structures that we can use at this point to guide us going forward. So the first structure here is the 13,150, which happens to have been broken this morning. As you can see, this level was a strong selling niche on Friday of last week's trading session. We saw it broken this morning, and from a technical standpoint, we expect that price could still come back and do a retest of that level. So if at any point in time during the New York session today price action comes into the structure, we want to be looking out for buying opportunity. Remember how you look for it. You want to scale down to your lower time frame, like your 10, 5 or 15 minutes time frame. Look out for multiple rejections here where buyers are trying to negate all attempt by the sellers to break down the structure. So if the buy momentum continues there, then we look out for an opportunity to buy so we can join that trend continuation to the upside. So that's the first platform for a buy opportunity. Now if price action drops below the 13,150 to the downside, then we have another bust stop here at a 13,120 level, and you remember how important the 13,120 level has been for us this week. This was where price action started selling pressure this week, making that level our resistance point at the beginning of the week. And with the breakout of that resistance line, that was a signal that buyers are gradually gaining some momentum. And obviously we expect that from a technical standpoint, price is still likely going to come back and do a retest of that structure. And if this happens, then we look out for buying pressure. Then we could join at the breakout retest of the structure to the upside, where we could add more position at the breakout of 13,150, and we continue to ride the move all the way to the upside. So this is how we are going to be looking out for buying opportunity on the US tech for today. So that is that on the US tech. We are going to be holding on to a bullish bias on the US tech for today. Thinking about the contrary, probably if sellers could come in here, I'm not seeing any position at this point that suggests a sell momentum. But if we go to the 4 hours time frame, can we still see any at all? I don't think so at this point. I don't think so. I'm not seeing anything at all that suggests any selling momentum in this market, unless price action breaks down this trend line to the downside, then I could be considering selling the US tech, and that could take quite a while before that will happen. But we could be seeing some signals along the line on our lower time frame, so just watch out for lower lows and lower highs at any point in time on our lower time frame that could suggest that price action has a tendency of breaking down this trend line to the downside to give us a selling opportunity in this market. So you could look out for selling pressure, but at this point in time I'm not seeing anything that suggests price action could go bearish. But on the lower time frame, if we start seeing let me give you a visual representation of what I'm talking about here. So if we scale down to the lower time frame like this, and we begin to see selling pressure where price action continue to find lower lows and lower highs, then this could be a sign that we might be in for a bearish move. So if you see the first low, the first lower low, then the first lower high here, and selling pressure continues up below the 13,150, then we could be considering a selling opportunity. Join the decline to the downside, and as soon as price gets into the 13,120, you move your stop loss, lock in that sell profit, as we don't know how price action will react to the 13,120, and depending on how price action reacts to this level will determine if we are going to be adding more sell position or getting ready for that bullish momentum we were looking for earlier. So if buy pressure resumes above the structure, then we get ready for that bullish momentum. But if a breakdown happens, retest of structure, definitely will welcome more selling opportunities in this market, and we shall continue to rather move all the way to the downside, where the breakdown of this bullish trend line will now be the huge confirmation that we are going to be doing a sell-off in this market. I doubt if all the sell expectations will happen today, but if it does happen, I want us to be on standby to be able to catch that opportunity. So that is why I'm painting that scenario too as well, so that you wouldn't miss out on that opportunity. So let's see how price action plays out going forward, and we shall be here tomorrow to review how well this commodity has been doing. So that is that on the US tech for today. If you have any questions, let me know right in the comment section. So moving on right now, we shall be taking on the next currency pair, which is the GBPUSD. And remember, the GBPUSD, we had this macroeconomic event this morning, which wasn't saying anything good about the UK economy. It was on a negative side, and normally we should be expecting some bearish momentum in the market, but the opposite is what is happening right now. So sometimes the market can be a little bit funny, as that's why it's very important that we take note of the psychological pattern in the market, and this is revealed if we understand the price action in the market. So on the GBPUSD, we saw the situation here yesterday where we had our first sell position initially on the GBPUSD. So we had the situation at the beginning of the week where price action was caught within this channel between the 1.24200 level and the 1.23840 level, giving us a clue into the level of indecision in that market. And this was probably as a result of the fundamentals for this week. You know, the pound sterling has I think 3 or 4 high impact events for this week. When we looked at the economic calendar on Monday, let's look at it again so that we can see we can be on the same page here. So if we look at what is going on this week, as you can see here, we have on Tuesday we had a claimant count change and a higher low unemployment rate, which already happened this morning. And then tomorrow also we're having a consumer price index, which is more or less an indicator of the inflation situation in the UK economy as well. This is one high impact event that everyone will be looking forward to. Then we also have on Friday the S&P Global publication for the CIPS services, which is an indicator of the economic situation in the UK services sector. This is also an high impact event everyone we'll be looking forward to. And you can see we have two more high impact macroeconomic events for the UK docket, and that is why we had this old chopper situation happen at the beginning of the week. So we had our first sell position triggered at the breakdown of that 1.240 level as price action moved about 50 pips in our favor before those bullish momentum happened. And I told us all yesterday that we are going to be looking forward to buying opportunities if at breakout of the resistance line had a 1.24200 level happened. And this is exactly what happened this morning. If you are taking advantage of that, well done to you for being on standby to have caught that move, as you will currently be running with about 20 pips in profit at this point. But if you had missed out on that opportunity, well, it's okay. I still think that we still have a lot of opportunity in this market, as the current market structure here is still very new and still has more potentials for more trading opportunities at this point. And at this point in time, we cannot yet say for sure that this is where price action will be going for the later part of the week. It's still looking a little bit bullish, and the tendency of sellers coming into also is still in the air too as well. But for today's trading session, we have a simple setup that we can use to guide our trading activity. And looking at the current structure we have here on the 1 hour time frame, it's looking as if price action is going through a reversal pattern. So if we take into consideration the impulsive move that started at the 1.2550 level on Friday last week, you will see that price dropping into the structure looks like if price action was finding it difficult to find a new low, hereby resulting in this gradual bullish momentum that has broken out of that resistant line for the first time this week, which for me at this point is a signal that we could be going bullish. But one thing we should also take into consideration after looking at this impulse leg is the fact that the bullish momentum we are seeing so far could turn out to be a retracement of that impulsive move, where certain pressure could come in anytime from now, probably around the golden zone area, to incite the second wave of that bearish momentum. So we are going to be putting this into consideration too as well. Now, to make our job easier today, and for those who had bought at the 1.2420 level, we already have a temporary bullish trend line here that we shall be using to guide our trading activity for today. So what this simply means is that if price action continues to trade above that trend line, we shall feel comfortable in our buy position. So there is still I'm saying here that for those who had missed out on that opportunity at the breakout of the 1.242, there is still a chance that price could still come back, do a retest of structure, or even do a retest of the trend line, where the appearance of buy pressure along the zone on our lower time frame will welcome the second wave of that bullish momentum that started today. So that is one possibility here. So let's keep this in mind as we continue to monitor price action. So if price action continues to the upside here, I want us to consider that impulsive move and project where we think that a retracement phase could actually end before the second wave of that bearish momentum will happen. And if we use our Fibonacci retracement tool and run it through the previous impulse leg, we want to be focusing at that area between the 78.6% and the 50% of that previous impulse leg. So at this point, we have a potential sell window here, potential sell window, and I'm also call that area a potential TP target zone for the current buyers. So potential TP target zone for buyers. So that is what this level is going to be for us. So I'll place this right inside that box for the sake of clarity, and then we give this a yellow color. All right, so we delete the retracement tool, as we no longer need it anymore. So right now we have this situation here. So we want to see how far this move is going to go. Will it turn out to be a retracement phase, or is it going to turn out to be an impulsive move that will begin the second wave of that bullish momentum to the upside? So we are going to be focusing between the 1.2450 level, what a psychological level that is, and the 1.25050 area. So within this area, if we start seeing selling pressure anywhere around this area, it could turn out to be a reversal pattern, double top structure, head and shoulder pattern, falling, rising wedge, whatever it is that comes in around that area. Then we should be getting ready for a bearish move to the downside, which could further lead to the breakdown of that trend line and the 1.242 level, where another opportunity to add more sell position could come in. So that is how we are going to be selling if this bullish momentum continues into the structure. And if at any point in time within the structure here, and instead of identifying a reversal pattern and instead price action transitions into a trend continuation pattern, probably like a bullish rectangular pattern, breakout retest, then we shall be negating that potential sell window and get ready to add more buy position to our existing trade. So our center of focus now remains between the 1.250 and the 1.2450 level, where we want to see our price action will react to that structure if the bullish momentum we are seeing right now continues. So that is one perspective to this. So I hope you screenshotted my screen so that you can use it as a reference point, or probably record my voice so that you can use it as a reference point to make your individual decision. Now, another thing I would like to state here is that if price action does not climb to the high side, that is, if we don't see higher highs continue anymore, and instead price action continues to drop to the downside, then we might likely be in for a momentum shift. And now, based on this current structure, what do we want to be seeing on this chart that will give us the confidence to sell the GBPUSD? Well, we already have a structure which we said we are going to be using as our yardstick for a bullish momentum this week, and that is the bullish trend line that we have here. So this is the bullish trend line here, and as long as price remain above that trend line, we feel comfortable in our buy position. But if at any point in time during the New York session today, we start seeing selling pressure resume in such a way that it breaks down that bullish trend line, then at this point we want to have our red flag start waving for an opportunity or getting ready to join a bearish move to the downside. Now remember, if the breakdown happens, we still need some confirmation to give us that confidence to join that move to the downside, and this would reflect on the chart in the form of a retest of structure. So we could see a retest of the trend line or retest of the 1.24200 level, where continued selling pressure on our lower time frame give us a clue that buyers are finding it difficult to climb back above that bullish trend line. And if that becomes the case, then we have no choice than to get ready for a bearish move, where a breakdown retest of the 1.2400 level will give us that opportunity we are looking for to sell the GBPUSD. And a further breakdown or retest of the 1.2350 level will be welcoming more opportunity to add to our sell position. So let's keep this in mind as we continue to monitor price action from this current structure. If you have any questions, feel free to drop your inquiry in the comment section. I can see your comment 756. Of course, we are going to be treating the XAUUSD in a moment. I hope you're still around. So let's look at it together right now. So the next commodity we are going to be looking at is the XAUUSD. On the XAUUSD, we had some sell positions during the course of yesterday's trading session. As you can see here, at the beginning of the week, we saw how price was initially trapped within the channel. It was a $10 channel between the $2006 level and the 1996 area. Though we had the breakout of the structure during the early hours of yesterday, and I laid emphasis on this, that this might likely turn out to be a bullish signal, but we'll still need some confirmations to happen to join that trend continuation to the upside. And I told us all that we want to see buy pressure resume around this area on our lower time frame to give us that leverage. And I also made mention that considering the sell pressure we noticed around the $2015 mark area, especially after such a long impulsive leg to the downside here, we might be seeing this as a sign that sellers are gradually gaining momentum in this market. And to further buttress this expectation here, we scaled down to a much more lower time frame, that is the 15 minutes time frame yesterday, where we identified a simple setup to be able to take advantage of that bearish move if it will be happening. So this was what we saw here on the 15 minutes time frame. So let us look at this together. So here we are during the live session yesterday. So we were around the structure during the live session yesterday, where we were seeing some buy pressure resume around that area. So I told us all yesterday that with the breakdown of this trend line here and the sell pressure continuing to the downside, we might likely be seeing a bearish move to the downside. And what we said here is that we are going to be looking forward to the breakdown of the $2007 mark to confirm this bearish move to the downside, and that was exactly what happened. So with our sell stop order below the structure, we had a sell stop order here and we had a buy stop order above the 2015. So we said a breakout of 2015 will welcome a buy position, and the breakdown of the $2007 mark will welcome selling opportunities in this market. So with the sell stop order below the structure, we had our first sell position for the week, and in fact price action moved about 260 pips in our favor before this bullish momentum began. I hope you are able to scoop in some profits around that area. And the further breakdown of the $2,000 mark welcome more sell position, and the breakdown of the 1996 also welcome additional sell position. So you must have made at least a minimum of 400 pips on the XAUUSD yesterday. Now, with the situation we have right now, and considering the continued buy pressure we have been noticing here since the later part of the New York session yesterday, we want to be taking a fresh new look at the current market structure. And the first thing I was able to spot here is to consider the bullish momentum we have been noticing here since the New York session yesterday. And in order to acknowledge that bullish momentum, what I did here was to connect the series of higher lows to give us this beautiful trend line, which I will be calling a temporary one in the meantime. And the reason why I will be calling it a temporary one is simply because of this impulsive move that brought price into this level. So it could turn out that the bullish momentum we're noticing so far could be a retracement of that impulse leg that brought price to the 1982 level to inside the second wave of that bearish momentum. So our center of focus is going to be between the $2001 level and the $2007 area as we head into the New York session today. Now, how do we intend to take advantage of any potential trading opportunity during the New York session today? Now, look at the structure closely here, and remember that we had that very important key structure at the $2,000 mark, which we said we are going to be using as our guide for trading activity this week. That is the $2,000 mark level here, a powerful psychological level considering the round figure of that price. And as you can see, that line also shares a beautiful confluence with that bullish trend line. So let's talk about the expectation of sellers in this market. And the reason why I'm talking about the expectation of sellers, first of all, is the fact that since the beginning of this week, it has been bearish in this market. As you can see, price actions started at the 2015, dropped, moved about 300 pips into the 1982, which is more or less at this point an impulsive move to the downside, and this could be a retracement to incite another wave of bullish or bearish momentum. So we want to consider the expectations of the sellers at this point. So right now, since we have a trend line here, we shall be using this trend line as our yardstick for trading activity today. So what this simply means is that if price action remains above that trend line, we look out for more buying opportunity in this market. But if price action breaks the trend line, then we'll have no choice than to get ready to sell the XAUUSD. And to sell the XAUUSD, I already have a structure here at the $2001 mark after considering how price action out that level has been a major determinant of price action since the early hours of today. Look at what happened here. In fact, if we go to as far back as the first couple of hours in the New York session yesterday, we saw how that level was a strong selling niche. That's the $2001 mark. We saw here during the early hours of today how that level also was a strong selling niche here. Look at what happened here again. We saw selling niche. We saw the breakout of structure. We saw price action come back into this level. We also saw some selling niche before this breakout happened. So at this point in time, we have been witnessing a multiple rejection of that $2005 mark as price is yet to find a new high. Breaking out of the previous structure is still not yet happening at this point. And looking at this candle here, we are beginning to see some selling pressure resume again. So for me, this might turn out to be the peak price could ever get to today. And if the selling pressure here continues, then a breakdown of the $2001 mark should be welcoming a sell position in this market. And if you look closely into the structure, a breakdown of the $2001 level will also have broken down that bullish trend line here to signal that the trend line may no longer have that capacity to continue to hold that bullish momentum. And if that is the case, continued selling pressure below the structure between the 2001 and the $2000 mark will be giving us more confirmations to join or add more position to our sell position on the XAUUSD. Now, a further breakdown of the 1196 will be welcoming more selling opportunities in this market. So I hope that we be on standby so that we can catch this move. For me personally, it's looking more bearish in this market. Let's look out for how we can take advantage of this move by getting ready to join a decline at the breakdown retest of that 2001 and $2000 level. Now, in as much as we're looking out for selling opportunities here as well, I always try to make things as open as possible, as we need to be as fluid as the market is so that we can catch that move when it happens. So we are also going to take into consideration the potentials of the buyers too in this market. And if we are considering the potentials of the buyers in this market, one thing I want to be seeing here, for me to buy the XAUUSD is to see price action break out of that $2008 mark. This level has been a strong selling niche in the past, though we had a breakout at the beginning of the week where buyers couldn't maintain that momentum to continue to the upside here, as you can see what happened here. So if we have a breakout of the structure happen today, then definitely this trend line here will continue to be our guide to rather bullish momentum all the way to the upside. So a breakout of the $2007 level, have your buy stop above that structure, and then we want to be riding the move all the way to the upside. Then a further breakout of the 2015 will welcome more opportunities in this market. So that is how we are going to be trading the XAUUSD today. And as you can see here, we have structures between the 2007, the 2011 and the bullish trend line here, which is serving as our yardstick for trading activity for this week. So let's be on standby to catch any of these opportunities as price action is being monitored. So that is that on the XAUUSD. I hope I made myself clear. If you have any questions, let me know right in the comment section. And at this point in time, I'm already out of time, but let's run through that last pair that we have been monitoring since the beginning of the week, and that is the USDJPY. So I will run through that quickly and make sure that I make things as simple as possible before we end today's session. So I already have a sell position triggered on the USDJPY, and I'll be telling you why that is. And let's run through how the week started for us on the USDJPY. So we had a situation at the beginning of the week. Remember, we had the neckline of a potential reversal pattern on the daily time frame, had the 133.800 level, which happens to be the key level for this week, where we said we are going to be using it as a yardstick to guide trading activity for this week. Now look at what we saw here at the beginning of the week. We saw this beautiful consolidation phase here, where price action was initially trapped within the 134.200 level and the 133.710 area. And with this situation here, you know what we look out for. We wait for price action to either break out of the resistance line for buying opportunity or breakdown of the support line for selling opportunity. And we all had our sell stop order below the structure and our buy stop order above the structure so that we can catch that move. And in fact, we had our first buy position for the week as price action broke out of that resistance line, and in fact price moved about 50 pips in our favor before the sell pressure resumed at the 134.550 level. And the continued selling pressure throughout the middle of the night was more of a concern to me that sellers might likely be gaining some momentum here, pushing price to the downside. So what I did here was to have a sell stop order below the 134.200 level, and after considering the nature of this candle here, which closed in the form of a shooting star candle, which is a sign that reveals the presence of the sellers at this juncture in this market. So at this point, I had a sell stop order triggered here. I duly shared this on my public platform this morning, and we saw price action continue to the downside. And if you are taking advantage of that move, well done to you for being on standby, as you will currently be running with about 24 pips in profit. So if you had a sell position at the 134.200, I will be advising you to move your stop loss right now, secure this current position, and let's see how far this move is going to go. And if a further breakdown of the support line here at the 133.700 or the 133.800 level happens, we want to be adding more sell position to our existing trade. So I'm looking towards a bearish momentum for today, but if at any point in time we begin to see some buy pressure resume at anywhere around this area, I would rather see price action break out of the 134.550 level before I could be thinking of buying the USDJPY today. So let's have a buy stop order above the structure, hoping that a breakout of that level will be welcome in a buy position, then a stop loss below the structure for any buy opportunity in this market, hereby dovetailing to about 35 pips stop loss in that regard. So let's see how price action plays out here. It's a very simple setup we have here on the USDJPY, unless you can munch my screen so that you can use it as a reference point when you're about to make your individual decision on the USDJPY. So on this note, I want to be calling it a day here. It has been a wonderful and beautiful moment with you guys, and for the newcomers, I hope you are able to catch one or two things in this session. But trust me, continue to be with us. It's 10 a.m. UTC on a daily basis, and with time you get to understand how this works, and you will be able to really implement whatever knowledge you have gathered here in your life trade. So do have a wonderful evening, everyone. I can see your comments 6756. You are welcome, and I hope you are able to gain one or two things today. So let's see how price action plays out, and tomorrow we shall be coming back here again. I look forward to seeing you guys again tomorrow. 10 a.m. UTC, 11 a.m. West African time, as we come back here again to review how well the pairs that we have been monitoring so far this week has been doing, and at the same time get ready to prepare for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.